Hello, good morning. You're watching Market Cafe on ET now with me, Vinny Motiwala, along with me is Ankita Saxena as well. Ankita, very good morning to you. New week, brand new week. Could you expect a brand new excitement in the markets, or are we expecting a dull start to this Monday?
Hopefully a good start to the week, Winnie, because even though the US markets posted losses on Friday, US markets are holding up pretty good because they posted the week of gains. However, on Friday, losses in utilities, healthcare and basic material sectors dragged the US markets lower. Dow Jones Industrial Average declined 0.4%, S&P 500 fell 0.2%, while Nasdaq fell 0.3% in trade. Now, despite Friday's losses, the major averages posted solid weekly gains in yet another sign of resiliency of the US markets. Now, the Dow rose for a fifth straight week, advancing 1.2%. The S&P 500 and Nasdaq Composite notched their fourth weekly advance in 5 weeks, climbing 0.8% and 0.3% respectively. Now, on Friday, we also had the retail sales data coming out. The numbers were pretty discouraging. The retail sales data showed consumer spending down by 1%. And also on Saturday, we had the US Treasury Secretary Janet Yellen, who said that banks are likely to become more cautious and may tighten lending further in the wake of the recent bank failures, possibly negating the need for further Federal Reserve interest rate hikes. Let's go across to European markets as well. Major European indices ended the day on a positive note. On Friday, the Pan-European Stock 600 index provisionally closed 0.5% higher, its fourth consecutive positive session. FTSE gained 0.3% on Friday, while DAX and CAC gained 0.5%, Winnie. So largely, I would say it's a positive handover, even though the US ended the day negatively. It's a positive handover because it shows market resilience. It posted a heavy weekly gains coming in there. But where's the crude at?
Absolutely. Before we talk about that as well, resilience is shown in the market, but SGX Nifty is not showing that much. Ankita, like we can see on the screens right now, it's just 0.4% down. So maybe we could expect some bit of that negative bias. But let's hope that it actually recovers, because Infosys numbers are something that we are watching out for. But let's just look at the top events. Obviously, Infosys came out with its numbers on Thursday. That is one that is going to be in focus in terms of specifically stocks. But what about earnings that we have today? We have Angel Broking, Just Dial, Quick Heal, TV18, Hathway Cable, which will be reporting their numbers. Overall, in terms of cues that we're watching out for, let's just keep an eye out on the wholesale price data that will be coming out today as well. Other than that, in some of the corporate actions that we're keeping an eye out on today, we'll see that Godavari Power, if the buyback issue is to close today. That was according to a tender offer. So yes, that will be closing today. All Cargo Logistics, last day to buy before we see the spin-off coming in as well. So All Cargo Logistics is going to be in focus. Muthoot Finance and Dhampur Sugar. Both of these in focus because it's the last day to buy these shares to be eligible for the dividend of the companies. And GI Engineering, as it's going to be the last day to buy to be eligible for the right issue of the company as well. Other than that, in terms of bigger events that we'll be watching out in terms of the domestic front, we'll have the External Affairs Minister S. Jaishankar and Russian Federation Deputy PM and Minister for Trade Denis, who will be meeting to address the FICCI in India's and Russia's business development as well. Their business dialogue will be taking place as well. So we'll be keeping an eye out on these big events today.
All right, Winnie, let's go back to the US markets and let's go into the details of what happened on Saturday. Now, in the latest on the banking sector, US Treasury Secretary Janet Yellen has said that banks are likely to become more cautious now. Given the recent bank failures, now lenders may tighten lending further, possibly negating the need for further rate hikes from the Fed.
And the ECB President Christine Lagarde believes it is unlikely for US to default on its debt as Congress inches towards the deadline to address the debt ceiling. Now, in an event that is in fact happens, Lagarde ensures of negative impacts marring sentiments are not just in the US but across the globe.
And let's center our focus on some earnings now. J.P.Morgan Chase posts a record first quarter revenue at $39.34 billion, topping analyst expectations. Net interest income too surged as much as 50% on a year-on-year basis. Meanwhile, the New York-based Blackrock's assets swelled to a whopping $9.09 trillion in Q1. Net flows into all of the firm's funds totaled to $110 billion.
And moving on, a biopharma research major, Merck, has agreed to buy Prometheus Life Science for $10.8 billion. Now, the all-cash transaction for Prometheus is the largest and the latest sign the latest sign of rebound in mergers and acquisitions in the sector following a dip in the activity last year. Merck said that the deal would strengthen their position in the fastest growing field of immunology.
And shifting focus to the world of football, reports suggest that American financial investor Carlyle is in talks about a major investment in Manchester United, this as the club's auction nears its concluding stages. Carlyle was one of the handful of parties vying for a minority stake in the Old Trafford club. Exact details of the proposal, well, including the investment amount and the deal structure, were yet to be finalized.
An update on the Japanese Prime Minister Fumio Kishida was evacuated unharmed after an explosive device was thrown towards him during his campaign on Saturday. Police wrestled a suspect to the ground as screaming bystanders scrambled to get away and smoke filled the air. It is reported that one police officer is injured and the Prime Minister continued campaigning on Saturday, but the chaotic scene was reminiscent of the assassination 9 months ago of the former Prime Minister as well.
And BlackRock's Larry Fink says inflation will stay higher for longer, largely driven by the geopolitical issues. However, he waved off concerns around a big recession for the US, citing an enormous amount of stimulus coming in from the new bills, infrastructure bill, the CHIPS and Science Act, and the Inflation Reduction Act, among a few of them.
That was all the top headlines from the global perspective this morning. We're going to slip into a short break. Viewers, don't go anywhere. We're seeing the SGX Nifty seeing a further bit of a decline coming in, down almost 0.5% of trade. Don't go anywhere. We'll be back with domestic updates after this break.
Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Vinny Motiwala. Now it's time to go domestic, and Milind Karmakar, who is the director and fund manager, Dalal and Brocha portfolio managers, believes that there is a great buying opportunity in the market right now. Now, while some countries can enter into a recession, we are poised for good growth. Let's listen into his views of the markets.
My personal view is that it's a great buying opportunity. Because I always believe that human brain is wired for the short term. I try and connect history with the current situation. It's nothing to do with whether history repeats itself. I think history repeats itself because it's all about human behavior. So the way humans behaved when there were a similar situation, and I think the behavior will continue to be the same. So that is the reason why I believe that we were most of the situations which we came across between 98-99 to 2003, we have seen a repeat of almost all those situations in the recent past.
Give me an example of what you're referring to.
Okay. So 98-99 we had the banking crisis, NPAs went up to 10%. Then government had to restructure banks. They had to put in a lot of money into the banks. We had one of the worst periods between 93 to 2003 when virtually market had not given any returns. Most of the infrastructure stocks had come out with bad results. And we had in 2001, we had 9/11. Prior to that, we had SARS. Because of that, there was, of course, it was not as bad as what we had seen recently. But still, it was pretty bad, especially in Asia and Southeast Asia. Then we had Iraq war. So there were a series of events which had impacted the markets between, say, 2000 to 2003. We had seen a similar situation now. We had bad NPAs in the banks, which now have corrected, and now we are at 1.5–2%. We also had, recently we had COVID, which impacted. We have a Ukraine war as of now. I remember reading a communique from Reserve Bank of India in 31st March 2003.
Not 23, 2003.
2000, okay. That's correct. That's correct. 20 years back.
Okay.
So, which went on saying that though India is the fastest growing economy as of now in India, in the world, we still have worries about the global growth. It is likely that most of the global growth will fall below 2%. In fact, some of the countries may go into recession as well. We don't know how the impact of Iraq war will be, and it could hit India's future as well. And because of all of these things, we are extremely cautious. And then RBI had also increased interest rates at that point in time. But things changed, and then you know how the markets and the economy behaved between 2003 to 2008. Like, we had a GDP growth of, I think, 3.8% in 2003. We went up all the way to 8.5%. So that is, even oil prices went up during that time. So we are seeing a repeat of that as well.
That was Milind Karmarkar's view on the markets. But on that note, let's... Welcome back, and you're watching Market Cafe on ET now. Let's just, firstly talk a bit about what the Asian markets are doing as well, and what we're seeing in terms of the Asia markets as of now, how they've opened up in trade. Kospi is trading with slight bit of a gain, slight bit of a positive bias there as of now as well, holding on to gains of 0.5% in trade. We have the Hang Seng that is too trading on the positive note. Let's keep an eye that one. It's up almost 0.4% in trade. Shanghai too trading with a positive bias. Nikkei, on the other hand, when you look at it, seems a bit of a fall that is coming in Nikkei. Even Kospi was flip-flopping between the red and the green right now is what it has picked up direction. So a bit of a mixed opening that has come in for the Asian markets this morning. Look at the SGX Nifty, surely it is testing that 17,800 mark. It's below that mark as of now as well, down 0.5% in trade. And talking about the Brent crude oil prices, bit of a subdued day coming in for the oil prices this morning. Brent crude oil is trading somewhere around the $86 per barrel marker. So keeping an eye out on that one. Now, what is keeping them a bit on the lower side, slightly lower in trade this morning, as hawkish comments have come in from the Federal Reserve in terms of the officials rising interest rates pushed up the dollar. So yes, the dollar factor coming into play, as well as focus is now turning on to the Chinese economic readings this week that we are watching in terms of more cues coming in from there. How is the recovery coming in from China is going to be an important factor for the oil prices. So that's how what we're getting in terms of Asia update as well as the crude check as well, Ankita.
All right then, and in another news, the luxury car maker Porsche is all set to start its new journey in India. The German automobile manufacturer's India arm launched new stores across the 5 major cities of India. And on the celebration of Dreams of Festivals, my colleague Shrishti spoke with them about the increase in the demand for Porsche in India and also about their sales. Let's take a look.
75 years we celebrate since the brand Porsche was established in Germany, and now in India we are a little bit more than 10 years present with the brand of Porsche. But nevertheless, we love to celebrate in India, and we are in the year of the Festival of Dreams, and therefore I think it's a good opportunity to us also to do the celebration of 5 openings in India. Why we did it? Because we really believe the demand of our customers is present, and we really wanted to fulfill the needs what the customer expected of a brand. And it's always important that one side we have the brand, on the other side we have our customers, and particularly how we can reach our customers, we can reach only through our partners. And therefore, it was quite clear if we want to fulfill the needs of our customer and make our customer happy, we need to have a professional network, particularly as you can see here in this beautiful showroom. And on the first day, the focus was setting up a strong dealership, setting up strong partners, and we put everything together in the last week. And we start our journey in Bangalore. We went to Chennai, then we went to Kolkata, then we went to Ahmedabad, and today we are in Mumbai to celebrate 5 openings, to celebrate the brand and to celebrate 75 of Porsche globally and more than 10 years in India.
Okay, But if I may ask you that, what is getting you into the Indian markets? Because 2022 has been a record year in terms of Porsche India sales in India. So what is the business outlook for 2023 and even ahead?
Well, let's first back up again and look at the last couple of years. And last year was really an extremely good year for Porsche in India. 64% increase in retail over the last year, and the year before 62%. So it just told us that there is a lot of potential here. And of course, we think that also this year will be a good year for Porsche in India. We don't know exactly where we're going to end up. But at the end of the day, it's for us not just looking at retails and maximizing retails. It's about really looking at customers we have here. And this was part of the reason to expand now our network and to open in 1 week 5 showrooms in various cities here in India. Tells you the commitment of Porsche India, to look after these customers who are not really just customers, they are fans and enthusiasts of the brand. And we always say that Porsche doesn't have simple customers, we have fans, we have ambassadors, because there is kind of a community between the Porsche customers, and that's what we want to foster here.
Okay, but since the community in India is getting bigger, so is there anything that Indian customers specifically look for Porsche India, or some of the requests that you see coming from the Indian customers, looking at the road, looking at the preference of the customers, anything?
Yeah. Well, overlooking all the Porsche business in Middle East, Africa and India, I can only tell you that Indian customers know very well the Porsche brand, and they are enthusiastic about the sports cars. So they like sporty cars, they like luxury cars, and this, of course, in combination speaks very much for the Porsche brand.
From automobiles, let's get you a roundup of all the earnings that have come last week. And obviously, Infosys reported a disappointing numbers in Q4 FY23. We saw revenue decline in terms of CC growth on a quarter-on-quarter basis. It was down by 3.2% as well, while the revenue guidance for FY24 was also quite weak, what they've given, versus when you compare to FY23, the guidance had given. Now, revenue obviously came under pressure because of unplanned ramp downs as well as cancellations that we've seen coming in. Listen in to the latest word that is coming in from the management of Infosys on these numbers.
In Q4, we saw changes in the market environment. During the quarter, we saw unplanned project ramp downs in some of our clients and delays in decision making, which resulted in lower volumes. In addition, we had some one-time revenue impact. While we saw some signs of stabilization in March, the environment remains uncertain. This led to our Q4 year-on-year growth of 8.8% in constant currency and quarter-on-quarter decline of 3.2%. Our operating margin was resilient at 21% for the quarter. We had $2.1 billion in large deals in the quarter.
All right, then that was the word coming in on Infosys, but let's also listen in to the word coming in from the TCS management, which believes that despite global uncertainties, TCS is still aspiring for double-digit growth in FY24. Let's take a look.
So, Samir, while we can judge the numbers by saying that, okay, it was the slowest quarterly growth in last 10 quarters, margins were under pressure despite the currency tailwind. One thing is clear, if I summarize by saying the next 2 or 3 quarters would be hard to call given the macro dynamism. Will that be a fair assessment?
Yes, given the uncertainty, we would believe that we'll have to play it one step at a time rather than taking a forward view on it.
And it will be tough to get double-digit growth in FY24.
No, I would still aspire to double-digit. Depends on how it plays out.
Let's keep it with the IT sector itself, because that's one sector that is going to be in focus. We could see some pressure coming in here, and we have Onkar Tangsale, who is going to be talking to us about the IT sector, as well as Deepan Mehta also, who gave his view. Let's go across and listen in to what their views are coming in on the IT sector performance so far. That is by Infosys as well as TCS.
No, definitely. I'm not expecting a strong bounce back in terms of revenue growth momentum in Q1 FY24. Why? Because the thing is that it's being, we are, everybody is listening or everybody is hearing that there might be a slowdown in the IT sector, but IT sector has started demonstrating the weaker kind of an execution after almost year and so, or year or two. So there always comes up with a lag. I don't see an extreme bounce back in the next quarters. Maybe a couple of quarters, maybe it will take to settle it down. Nobody knows how much the recession or the impact of the recession or a slowdown, or there will be a shallow or there will be a deep. So one can say if negative sentiments persist from the North America, let's say for the Europe, then there is a lower possibility of the spend. See, so I believe these IT services are getting the deals, but the automation process, if they does not have the business, they will delay down the process for the automation. So they will not be able to bill it for the quarter or so. So there might be a couple of quarters that one should stick upon or should see upon to get a better development in the next couple of quarters. But if any positive news from the US or UK will help them to gain at least on the sentimental basis, but not on the earning part.
So yes, I think it's a bit of a shocking the way the Infosys numbers have come, and I think a lot of analysts will go into understanding what went wrong. But for the time being, I think it's best to stay away from the sector. The time to sell certainly is gone because the way the correction has taken place. And maybe, a couple of quarters more, the pain will be there and there could be a recovery soon thereafter. But some important figures like deal flow and all, I need to look at it more closely. But on the face of it, optically, I think, yes, definitely a disappointment. But let's take a more informed view once we have to know what the management has to say.
All right, then moving on, HDFC Bank released its Q4 earnings and its quarter-on-quarter NII and net profit have jumped, while the asset quality has also improved on a sequential basis. My colleague Harsh is here with all the details. Take it away, Harsh.
Well, yes. So we've seen a good expansion when it comes to the net interest income for HDFC Bank, up 24% on a year-on-year basis, largely where the market saw it as well. The bit of a miss that's come on the earnings front is on the operating profit number. It's come in at 18,600 odd crore, and the expectation was it will come in at 19,500 crore, but the lower provisions number has knocked that back. The lower provisions have come in at around 2,600 crore versus the 3,000 crore mark that the street was penciling in, and that lower number helps or aids profitability. So profitability is largely in line with what markets were expecting, but the better asset quality definitely helps. So we've seen GNPAs and NNPAs improve quite well, 10 bips improvement on a very low base already. For that GNPA number, it's come in at 1.12% versus 1.23% on a sequential basis. Of course, the advance and deposits number already disclosed, solid growth on both sides of the balance sheet for HDFC Bank, and that engine continues to run, but the deposits number was a bit of a standout, a solid 1.5 lakh crore in terms of deposit growth in this particular quarter for HDFC Bank. OPEX remains elevated, which was really the impact on operating profit. OPEX is elevated largely on the back of a solid growth in terms of the branches as well as a jump in employee count. In fact, OPEX grew 33% YOY, 8% sequentially. So we've seen a very solid amount of investment coming through. In terms of what brokerages are saying, we have Investec, which has hiked target price by just a wee bit, around 1720 is what they've put their revised target price as. It was at 1690, and they believe that the merger related concerns continue to remain for HDFC Bank. That's not been allayed completely. CLSA has an interesting take. They've said that credit costs have offset the higher OPEX. That's a positive, and the Q4 positive is with regard to the deposits and loan mix. The risk reward now, they believe, is evenly placed and the multiples are now fair. That's what they continue to believe. Kotak has hiked the target price by quite a bit, from 1800 to 1925 a share. They've said that lower provisions will drive earnings growth even in FY24 going forward, and the upcoming merger is the current near-term headwind for HDFC Bank.
Okay, thank you so much for that, Harsh. That's the word coming in terms of numbers as well as what the brokerages are saying. But let's go across and listen in to what the management actually had to say in their earnings con call and what were the key highlights that are coming in from there. Let's listen into the snippet.
Retail constitutes about 83% of total deposits and has been the anchor of our deposit growth. Retail deposits grew 23% year-on-year and 7% sequentially. During the quarter, we added retail deposits of 107,000 crore. Wholesale deposits constitute 17% of total deposits. As of March 23, these grew 10% year-on-year and 15% sequentially. Retail advances growth was robust. Domestic retail advances grew 20.8% year-on-year and 5% sequentially, primarily driven by strong performance in personal loans and home loans. It's resilient. LCR for the quarter was at 116%. Capital adequacy ratio is at 19.3%, with CET1 ratio at 16.4%.
Well, all right. With that, it's time for us to slip into a short break. Don't go anywhere. We go stock specific on the other side.
Welcome back, and you're watching Market Cafe on ET. Now, let's just talk a bit more about the auto sector. And Lamborghini has actually launched the Urus S SUV in India with the price starting at 4.8 crores. Now, this is the ex-showroom price that we're talking about. This new SUV is an upgrade from the Urus SUV and the luxury car maker's best-selling model that was since 2018. This super SUV had already made its global debut in October last year. My colleague Aishwarya took a closer look at this new launch and caught up with Sharad Agarwal, the head of India operations at Lamborghini as well. Let's go across and listen in.
We will start the delivery of this model very soon, within this month. So you will start seeing them on Indian roads very soon now. And in terms of the volume, what we are looking at both, we always look at that how can we get more for the market, but our is always to have consistency, and our focus is to always focus on customer journey and customer experience. I think that is what our primary focus, and then volumes are the second part of the business.
So what's your strategy going to be like for the Urus sales, and could you highlight a little bit more about the sales volumes?
So with the Urus, we already have our strategy in place in India, and it's not only restricted to Urus but also the overall business. So in India, we are focusing on three key pillars to drive our growth story. First is to expand our reach, both demographic and geographically. So we are reaching out to new customer segments, which are also the first generation business entrepreneurs, people from startup ecosystem, the women buyers, and we are seeing a very positive shift in that, because earlier the demand was largely restricted to the third and fourth generation business entrepreneurs. And then second is our focus that to reach out to the tier 2 cities, because we strongly believe that the wealth is not restricted only in metros. So today we see that 25% of our volumes are coming from tier 1 and tier 2 cities. And the third strategy which we are focusing is that how do we bring new models faster to the market, because we want our customers to start driving a new Lamborghini around the same time when we start delivering them in the other part of the world. So we have the new Urus S here, and like I said, we'll start delivering this car in this month. So it's the time when people in other part of the world will also start driving the Urus.
And moving on to another auto major, Mahindra & Mahindra has recast roles of senior officials and created a new position of a CEO for the automotive business. Now, it has appointed a chief operating officer for the newly formed electric vehicle business as it charts a path for the emerging electric SUV portfolio. Effective 4th of April, Nalinikant Golagunta has taken charge of the automotive business as the CEO, a position that's newly created. Now, he will report to Vijay Nakra, the president of automotive business. Now, for the newly formed Mahindra Electric Automobile, Mahindra has appointed Kausalya Nandukumar as the chief operating officer from the 1st of April.
Okay, and let's just talk a bit more about autos, because we have Eicher Motors that is actually going to be in focus. Why? Because we have a note that is coming from Kotak Securities. Now, they are maintaining a sell on the company given a target price of 2,800 rupees per share. Furthermore, they believe that the demand recovery for Royal Enfield is something that could remain a bit uninspiring, a bit under pressure that we could see coming in for Eicher Motors. Other than that, the demand for Royal Enfield in key states has also remained weak as of now as well, and they expect it to be a bit subdued in trade as well. However, in terms of the competitive intensity, they expect that it's actually going to be setting a bit of a higher stage and could be increasing going forward as well, especially in the Royal Enfield segment. On the back of all this, they're maintaining a sell on Eicher Motors, given a target price of 2,800 rupees per share.
Right, then moving on, Apple Chief Executive Tim Cook has said that US tech major is excited to be building on its over 25 years history in India, where the company is opening its first 2 retail stores this week. Now, Apple will open its first company-owned retail store on the 18th of April in Mumbai and a second in Delhi on the 20th of April. Now, Cook is widely expected to be in India for the inauguration of the stores this week. Now, he may meet top policymakers, including Prime Minister Narendra Modi, and apprise them of the company's plan to deepen iPhone manufacturing in India.
Absolutely, Ankita. Surely everyone's keeping an eye out on that Apple iPhone store opening as well. But let's keep an eye out the stocks to watch out for then this morning in trade as well. And Lisa is here to give us the whole list of stocks that she is keeping on her radar this morning. Lisa, good morning.
Yes, well, good morning. Tata Motors will be increasing the prices of its passenger vehicles, and the weighted average increase for the same will be 0.6% depending on the models as well as variants, and this increase will be seen from May 1st going forward. Well, the passenger vehicle had seen significant increase in their input prices, and that compelled the company to take on this hike to pass on the increased prices. Moving on to Zydus Life Science, they have received a US FDA approval for its isoproterenol hydrochloride injection, and this will be manufactured at Jarod near the Vadodara facility. And well, this injection had an annual sales of 28.5 USD dollars in the United States region. Moving on to Philip Carbon Black Limited, well, they have commenced the manufacturing for 60,000 metric ton of carbon black, and this is at its Greenfield facility. VRL Logistic has also announced further capex and modification of its capex earlier announced in its goods transportation business, and they will entail a capex of around 697 crore for FY24. Sarda Energy has also informed that after rectification of deficiencies seen in their mining plan, they had received an order for suspending the operations in their iron ore mines from Indian Bureau of Mines. Well, that order has now been rectified with immediate effect. And lastly, on Adani Green Energy, they have updated on their operational updates, and their total operational capacity for FY23 that grew 49% on year-on-year basis at 8,086 megawatt, and also the sale of energy increased by 58% year-on-year at 14,880 units in FY23. Well, these are the stocks that will be on investors' radar for today.
Well, thank you so much for that, Lisa. Surely we will keep an eye out on all the stocks that you just mentioned. However, brokerage houses Aquarius as well as Investec have initiated positions on a bunch of stocks. Now, while Aquarius has set a long on APL Apollo Tubes and Mrs. Bector's Food, Investec has initiated a buy rating on Delivery and 361 WAM. My colleague Vamakshi is here with more details on these brokerage notes. Over to you, Vamakshi.
Well, absolutely. First up is APL Apollo Tubes. We have a note that has come in from Equirus, and they're highlighting that there is a very strong structural play in an expanding market. The company is well capitalized on industry growth levers, and they believe that rapid shift towards value-added products could help the company keep profitability on an uptrend. So given all those factors, Equirus has initiated coverage on APL Apollo Tubes with a long rating, target price of 1,413 per share. Delivery is the next one on our radar. Investec has said that they see some compelling competitive strengths for the counter. The business, in their opinion, is heading towards profitability. They're expecting Delivery to turn EBITDA positive in FY24, and they also like the company's business model, industry structure, and given those factors, they've initiated coverage with a buy rating on Delivery, given a target price of 415 per share. Bector's Food is the next one on our radar. Equirus believes that the biscuit business is seeing some good growth on the back of distribution-led initiatives as well as premiumization. As far as the bakery business is concerned, that is growing strength to strength, and in fact, they're expecting margin expansion to come in for the counter. Sales sales, EBITDA, PAT are also expected to increase strongly in the double digits from FY22 to FY25. So given all those factors, they've initiated coverage with a long rating, target price of 705 per share. And lastly, we will be keeping an eye out on 361 WAM. Investec believes that there are some strong growth drivers for the company that are expecting consistent compounding for this counter, and they believe that the model that the company follows mitigates some of the key risks. They're expecting to grow by 20%, revenue by 17%, and PAT by 20% CAGR over FY23 to 26. So given all those factors, Investec has initiated coverage on 361 WAM with a buy rating, target price of 675 per share. So given all these initiating coverages, these are all the stocks that you should watch out for and trade today.
Vamakshi, a lot of initiating of coverages that have come in this morning, keeping an eye out on all those names. Thank you so much, Vamakshi. But let's move on. And Milind Karmarkar, Director and Fund Manager at Dalal & Broacha Portfolio Managers, believes that there is currently great buying opportunity in the market and India has the potential to grow like China did in 2003 to 2008. Let's go across and listen to his views on the markets.
My personal view is that it's a great buying opportunity. Because I always believe that human brain is wired for the short term. I try and connect history with the current situation. It's nothing to do with when history repeats itself. I think history repeats itself because it's all about human behavior. So the way humans behaved when there were a similar situation, and I think the behavior will continue to be the same. So that is the reason why I believe that we were most of the situations which we came across between 98-99 to 2003, we have seen a repeat of almost all those situations in the recent past.
Give me an example of what you're referring to.
Okay. So 98-99 we had the banking crisis, NPAs went up to 10%. Then government had to restructure the banks. They had to put in a lot of money into the banks. We had one of the worst periods between 93 to 2003 when virtually market had not given any returns. Most of the infrastructure stocks had come out with bad results. And we had in 2001, we had 9/11. Prior to that, we had SARS. Because of that, there was, of course, it was not as bad as what we had seen recently. But still, it was pretty bad, especially in Asia and Southeast Asia. Then we had Iraq war. So there were a series of events which had impacted the markets between, say, 2000 to 2003. We had seen a similar situation now. We had bad NPAs in the banks, which now have corrected, and now we are at 1.5–2%. We also had, recently we had COVID, which impacted. We have a Ukraine war as of now. So I remember reading a communique from Reserve Bank of India in 31st March 2003.
Not 23, 2003.
2000, okay. That's correct. That's correct. 20 years back. Okay. So, which went on saying that though India is the fastest growing economy as of now in India, in the world, we still have worries about the global growth. It is likely that most of the global growth will fall below 2%. In fact, some of the countries may go into recession as well. We don't know how the impact of Iraq war will be, and it could hit India's future as well. And because of all of these things, we are extremely cautious. And then RBI had also increased interest rates at that point in time. But things changed, and then you know how the markets and the economy behaved between 2003 to 2008. Like, we had a GDP growth of, I think, 3.8% in 2003. We went up all the way to 8.5%. So that is, even oil prices went up during that time. So we are seeing a repeat of that as well.
Okay. So let's assume that the setting on the table is pretty much the same.
Correct.
Which is, we are in a depressed global growth environment.
Right.
And commodity prices could go higher as growth comes back.
Yeah.
So while the setting on the table is same, I would say that the cuisine is also different.
Sorry?
The cuisine on the table is also different, right? Which is that you had China, which started leveraging and started the insatiable appetite to consume from China came between 2003 and 2008. That will not happen again. The central bank's balance sheet were at a much different level in terms of their debt levels and ability to spend
Yeah.
Now they have to contract the balance sheet. And third, and the most important aspect, is the starting point of valuations. So the setup may look like the same, but the underlying circumstances are also different.
Okay, let me come to valuations first. So most of the infrastructure companies were showing losses that time. So their valuations were infinite, frankly. So that is as far as the infrastructure companies are concerned. As far as commodity companies were concerned, so commodity, I think we have seen the first wave of the boom already there. Okay. So there are certain things which can change 2-3 years here and there.
All right, with that, it's time to wrap up this show. Don't go anywhere. We have the market coming up. Thank you so much for tuning in.